Yesterday, one company lost 25% of its value in a single day. Not because of a scandal, because of a spreadsheet. I'm going to show you the actual mechanics behind this week's AI stock sell-off, the money loop, the hidden debt, and the accounting trick one investor says is hiding $176 billion. In plain terms, in the next 9 minutes. Because whether this is a bubble or not isn't a vibe. It's math. And once you see the math, you'll understand this week's crash better than 90% of the headlines about it. 4 companies, Amazon, Microsoft, Google, Meta, are spending roughly $725 billion this year building AI data centers. That's up 77% from last year. Add everyone else in the industry, and Goldman Sachs puts the total at $765 billion, about 2.4% of the entire US GDP going into server farms. That number alone isn't new. What's new is what happened in the last 7 days. A real sell-off, real money lost, and 3 separate cracks in the story showing up at the same time. The revenue, the debt, and the accounting. By the end of this video, you know exactly what those 3 cracks are, who's exposed, and why the people running these companies are giving you 2 completely different answers about whether to worry. Here's the crack that started it. This week, semiconductor stocks got hit hard. Micron down 13% in a day, wiping out $138 billion in value. Intel and Applied Materials both down around 10%. One analyst's bubble risk indicator hit 0.91, the highest reading since June 2000. You know what came a few months after June 2000? IBM lost 25% of its value in a single trading day this week. The market didn't panic over nothing. It panicked because the spending to revenue math finally got impossible to ignore. So let's do that math. If you want the mechanics behind stories like this instead of just the panic headlines, that's what this channel is. Hit subscribe. I break these down every week. Let's talk about who's actually buying all this compute. OpenAI is running at roughly $25 billion a year in revenue. Anthropic just passed them. Somewhere between $30 and $47 billion after what the company itself called crazy ATX growth in under 2 years. Sounds huge. It isn't, next to the bill. JP Morgan projects $5 trillion in AI infrastructure spending through 2030. Just to break even on 2026's spending alone, the industry needs about $71 billion in new AI profit this year. Not revenue, profit. The 2 best-funded AI labs on Earth combined don't generate enough revenue to cover a fraction of 1 year's infrastructure bill. And it gets weirder. OpenAI has committed to buying infrastructure from Broadcom, $350 billion, Oracle, $300 billion, Microsoft, $250 billion, Nvidia, $100 billion, and AMD, $90 billion, spread out to 2035. Meanwhile, Nvidia is investing up to $100 billion directly into OpenAI. Microsoft and Nvidia have also put money into Anthropic. Walk the loop. Nvidia funds OpenAI. OpenAI commits that money to Oracle for data centers. Oracle uses it to buy chips from Nvidia. Analysts now estimate over $800 billion sitting inside arrangements like this. That's larger than TARP. The 2008 bank bailout was $700 billion. Every dollar in that loop counts as revenue somewhere in the chain, even though very little new outside money ever entered it. Everything so far is public information. What I'm about to show you is the part almost nobody's covering. The real time bomb. Meta wants to build a data center called Hyperion in Louisiana. Cost? $30 billion. Meta didn't put that on its own balance sheet. It created an SPV, a separate legal entity. Got private credit firms like Blue Owl to fund it. The other $27 billion in debt is technically someone else's problem. Across the industry, over $120 billion has moved off public balance sheets in about 18 months. Total AI-related debt issuance is on pace to hit $570 billion. When you read official debt numbers, you're not seeing the full risk. You're seeing the part they chose to report. Michael Burry, who shorted the 2008 housing market, is accusing these companies of a specific move, booking Nvidia GPUs as 5 to 6 year assets, when real usable life is closer to 2 to 3. That difference matters. Stretch out depreciation, and your reported profit looks bigger than it really is. Burry's number? $176 billion in overstated profits between 2026 and 2028. His line on Nvidia? Nvidia is clearly Cisco, the company that looked unstoppable right before the dot-com crash, because everyone assumed the boom would never slow down. This is why Nvidia circulated an internal memo last November specifically naming Burry to push back. This is a specific, checkable accounting claim, the direct trigger for chip stocks bleeding out this week. So is Burry just right? Jensen Huang was in Tokyo this week and dismissed it outright, calling this the largest infrastructure build-out in human history, with demand for at least another decade. Hyperscalers haven't cut spending. Several raised it. Nvidia's own data center revenue is still growing over 75% year over year. But even the AI companies aren't uniformly bullish. Satya Nadella warned AI needs to reach far more people or it risks losing social permission. MIT researchers found 95% of enterprise generative AI pilots aren't showing measurable ROI yet. Not because the models are bad, but because most companies haven't figured out how to deploy them. The people building the infrastructure aren't slowing down, but even they're flagging. The payoff has to show up soon. So which is it? I don't think the honest answer is bubble or not a bubble. I think that's the wrong question. The compute demand is probably real. Jevons paradox says cheaper, more efficient AI usually means more total consumption, not less. The actual risk isn't whether people will use AI, it's who's holding the debt when growth merely slows down instead of collapsing. $120 billion of balance sheets, $570 billion in AI debt, $176 billion in overstated profits. None of that requires a crash. It just requires reality to arrive slower than the spreadsheets assumed. If this is the kind of story you want broken down before it hits the front page, subscribe now. Drop in the comments, bubble or build out? I'm reading every one.